All right, hey traders, TG Watkins here. It is October 5th when I'm recording this, and I hope everybody's doing well out there, and we are definitely seeing some developments in the market that we want to be talking about today. For anybody else out there who is new to me and to the page, profitpilot.com is where you can find out more information about me. And then, yeah, got some video newsletters and stuff that we've been talking about. So let's kind of get into it, see what's going on, and then we'll kind of get around the markets. So let's see, there were a couple stats that came up. The market moved up more than 2% in 2 days, each day. That's a big deal. So that was kind of a first thing. There have been some stats basically saying, the next couple of days or weeks or months, the market's been positive after a situation like that. So this is good news for bulls if you're trying to be bullish in a sense. Bad news for the bears. And I think really what's kind of happened in through here is we just got really, really oversold again. I mean, this is kind of pretty consistent during a bear market. And, that's what happens when, we get everybody on one side of the market, it tends to go the other way. And that's generally what we're seeing, I think, right about here is that the market really, really just got pushed down. I mean, we first off had a really good situation, at least on the short side, right here. So got our 5250 maneuver, price got rejected there. And then it was, I think, confirmation with Jerome Powell right there in Jackson Hole. And then I kind of forget what happened here, but then this was CPI or maybe this one was CPI. I think that was CPI. And then we had the FOMC. So it's just been one thing after another of not such great news. And that is why the market really just got driven down like that. But based on our Moxie patterns and all the rules and stuff like that, it's been working out nicely. We could see initially right there, that is how price got rejected by the underside of a downtrending hourly 50. And then this is really just a bounce in a downtrend. That was just a big short squeeze. But we could tell that this was unlikely to sustain itself because price over the 50 and the Moxie indicator below zero is an inverse trampoline move. So I was able to kind of see that coming, and it was a little uncomfortable if you were bearish trying to hold through that, but it was something that shouldn't have been, and so that is how that situation worked out to the downside. No sound, huh? All right, let me see if I can redo that real quick. Okay, give me just 2 seconds. And then we can get back in there. Hopefully everybody can see me also on Facebook and YouTube. So we'll see if that one's working. All right, almost there. All right, so we'll see if the Moxie room can get that working for now. Hopefully on Facebook and YouTube, everything is going fine over there. So we'll see. Thanks, Vinny. Appreciate it. Anyway, what I was saying, you guys have already seen. We were just kind of going through all that stuff. And then that kind of brings us to where we are currently. And if I look here on the higher time frames, we've got a couple things that we're looking at. Number one, we've got price here down at the weekly 200. That's going to be to support. That's going to be at least temporary support. Now, I would imagine, pretty sure that we are not done going down. I do think that the market overall is going to go lower, but I think that I think it's too stretched right now. So that's kind of my thought. You can even see the monthly chart. You could basically say that the monthly ran into the monthly 50 and is kind of catching some support. It hasn't touched it exactly, but maybe that's close enough. Either way, the weekly 200 has been touching. And then if we look here, we can just see that price got a little bit oversold. There's a bit of a gap here between price and the weekly 8. And then also just think about that double bottom situation. Now, what can be happening is we can still be duking this out. Price, this double bottom might be holding for now, but it doesn't have to necessarily hold later. We need to use the lower time frames to help confirm that. And so that is something that we're going to be watching on the daily and hourly time frame in the next few days or weeks or however long this takes. So this can be temporary support, and we'll just have to see how that is going to go. And you can see it was an undercut. So this could be considered a bear trap, meaning you get the bears all loaded up to the short side because it's breaking to new lows, only to have it actually reverse and go back up. So bear trap. And a lot of times we call that an undercut and rally. So, and remember, just rally could be whatever it decides to be. It doesn't have to mean like a rally like that. It can be, an undercut and rally like this before maybe rolling over again. So possibilities, we can't see too much yet as far as the downside, but I think right now we got a lot of stuff loaded on the short side, and all of that put call ratio. Come over here. I mean, look, put call ratio is again just super high. You know, it's almost at 1. It's been pretty consistently up here. You can see the 10-day moving average of the put call ratio is just super high and staying up there. So we're gonna have to see how that kind of works out. I do think that the shorts need to get worked off a little bit. It's pretty extreme for right now. We've just been seeing a lot of extreme stuff in general. And so I think some of that needs to get unwound. Now, the other side of it is, okay, so if we get a short squeeze, or at least the shorts are having to cover, is this going to create a massive short covering rally? We've seen those before, right? Let me kind of bring you over to the daily chart because that's a little bit clearer. There we go. So we've seen some short covering rallies, you know, here, even here, and here. So is that what is about to get sparked off here? Maybe. But I also just want to temper our expectations that while the shorts might get unwound and, you know, they might have to exit and there might be some, bullishness due to that, the other side of the equation is that we have to have money coming in to actually buy this market if we're going to get something like that, to really, you know, put the coals to the fire type situation. So we don't know if that's going to happen. It's really tough to say. And if it is going to happen, I think it's going to take a little bit more time and a little bit more work before that happens. So I'm envisioning that we're probably going to get something closer to this than we are something like this. So I think we're going to have to work off some of that oversold sideways condition, all of that. And then we'll just have to see if it's actually pretty extreme, like energetic to the upside, or if we're just going to kind of chop our way kind of higher situation. So just kind of temper your long expectations. Now, what I've been telling the Moxie group is that something to kind of think about and consider is that when the market stops going down and, you know, say people, stocks, or whatever investors can see that the market's not going down, some other stocks that are positioned right can take that as a green light. You know, it's just because you may not be going up, but as long as you're not going down, other stocks will be like, oh, cool, I'm free to rally. And so that is where you get, you know, as far as picking stocks, if you look around, you can find good stocks that are going to actually move up on these opportunities. It's the same kind of thing that we started seeing some stocks out there actually moving up quite nicely during this section. And then, of course, everything else started to really kind of blow up to the upside when that happened. So we're seeing that price, as I said, got really oversold. I mean, it is extreme to have the market move down this much, this fast for that, you know, pretty consistent. I mean, that was like a pretty consistent move down. So extreme readings to the downside. You know, everything is kind of showing we got a double bottom on the stochastic. We even have a positive divergence on the hourly chart. So we got a lot of stuff like that, you know, that's happening. And so I'm watching to see what kind of general upward moves that we can get. So that's my read on that. We're watching the VIX. You know, we watched the VIX here. I think the VIX is going to come down a bit. It didn't quite reach the upper trend line, but if you do look horizontally, it did reach kind of that horizontal trend line. And, you know, so that's another thing I'm looking at and being like, well, you know, when the VIX is that high, unless it's really going to explode and the market's going to implode, I think that this is kind of showing us, hey, the VIX has probably kind of reached its upper range and is likely to move back down. The other thing I'm seeing is, look here, price up, Moxie indicator down. So we do have some negative divergence on this. Now, lukewarm, if you're out there, you were asking me, can the Moxie indicator be applied to something like this that isn't really traded directly? Check this out. So see how price was going down? Notice how the Moxie indicator was going up. There was some positive divergence there. Now, it took a while to kick in, but talk about Moxie timing. There's your price trigger. Like, how perfect is that? That's really pretty great as far as a timing perspective. So right there is when the Moxie indicator started crossover zero. You saw the divergence coming, and boom, there you go. And then you started to get, you know, some of the moves to the upside. Now take that same idea and same concept, flip it upside down, and you could see it here with Apple doing exactly the same thing, just in reverse. You know, here was price moving up and up and up. Here was the Moxie indicator moving down, down, down. And where did it fire? Right there. So, I will say that I think we can wrap some of the Moxie indicator and principles around the VIX. Now, of course, I like looking at the UVXY2. I'm seeing some of the same stuff. So I do think that we should be watching to and for confirmation of the VIX moving down, which will mean the market moves up. So those are my general principles of what I'm operating with right now. Yeah, no, let's see. Let's see, something against the UVXY. Yeah, I understand that we're also starting from a higher VIX level, meaning, yeah, SPX options, VIX futures are less likely to move violently in the UVXY's favor. Right, I agree with that. And so that's kind of why I'm thinking, we're pretty high up here. And yes, the VIX is still comparatively high, but I think we should be seeing if VIX can kind of start coming back down to the daily 50. And then we'll need to reassess from there and see how quickly this comes down. But that's kind of what I'm thinking, because again, if we're going to wrap some Moxie principles around the VIX, then this gap seems like it should need to get kind of filled. You can see it here, gosh, even in through here a little bit and through here, and price, even here where price came back down to the 50. So just a common thing, kind of looking for price to come back down to the 50. I think we'll see if that can happen. All right, so then silver. Yes, silver, gold, all that kind of stuff. People have really been talking about this one. Let's see, if we may first get over here on the monthly and weekly chart, because the first thing I want to talk about is just that while I think that there are two things here. One, yes, it was a big move. Two, for now, on the higher time frames, this was a bounce off of prior support areas, and it was an oversold reaction rally. Let me explain some of those. So I have my cursor here, and you can see, where did silver come down to? You can see all the various levels that price basically came down to. You just look left historically on a monthly time frame going back over 10 years, and you could just see that this was look, it's a pretty much straight line as far as a support area just from price. So if you're just looking at price and you're like, that's probably going to find some support or some congestion or something like that, and it's likely to at least bounce for the time being. Now, if we drill down a little bit further, the other thing I see is that price was pretty oversold. There was a gap between price and the monthly 10. So it got oversold, and what did it do? Bounce back. So, we use moving averages as trends, and what's the direction of a trend? And oftentimes when price gets too far away from a moving average, whether it's to the upside or the downside, you get a reversion to the mean. And on a monthly time frame, so far, that's what's happened. So, big gap here, oversold, bounce back to the moving average. Okay, so that's that. Not too much to say on the weekly chart, so I'm going to move on from there. But then on the daily chart and the hourly chart, there were some setups, and we could see that basically it was a double bottom. And leading into that, you could see price down, Moxie indicator up, so there was the beginning of your divergence. And then you actually had a higher low right there. So you could say higher low, again with the Moxie indicator continuing to move up. And you actually got the Moxie indicator to fire right there at the low. That's pretty good timing. I got to say, I don't really look at silver. I don't look at the precious metals. They just haven't been a thing that has been really tradable recently. So honestly, I didn't really have my eyes on this. But now that this has been a thing, maybe I'll be watching this for a second entry, see if we can get something a little bit bigger to the upside. Because, for the last couple times, you could see as price came into the daily 50, it's gotten rejected. But now this is a pretty nice move. So the question is this going to go further? And if it is, then we use the lower time frames to help figure that out. And you don't want to be buying here, over the last 2 days. It's extended, right? Straight up over 2 or 3 days. It's unlikely to really sustain. So you look for a pullback, and if this trend is going to continue, the pullback should come into support at some point, and then that's where you can start picking up some precious metals or miners or whatever you want to do related to these macro situations. But you can see prices at least now back down to the daily 8. And as I said, clearly this is now getting past the daily 50. We've gotten all sorts of divergence, and yes, this looks like it should be the start of something on this time frame. Not quite yet on the higher time frames. On the hourly chart, you can even say, I like to call this basically a double bottom because price is retesting the low area. And you can see also there was some positive divergence, and then price got over the hourly 50 and pop, there was your move. So again, pretty extended on the upside. Let's wait for price to come back down and see where the pullback is going to find support if you want to go in on that. So that's what I see with silver. GLD, more or less the same situation, because if you look at GLD, let me get my cursor is already kind of there. If you look at GLD, where's price on the monthly 50 SMA? Probably a pretty good area that price is going to bounce. And then if you look left, you can see price is at the bottom of this channel, the previous high. So that might also act as some support. So both of these things are coming into some areas where we would expect price to generally bounce. And you could see the same thing with gold as we did with silver. You see how there's a gap between price and the monthly 10. So it's likely that if price is going to be able to bounce off of the monthly 50, it's probably going to come back up and do a reversion to the mean. Now, we'll have to use the lower time frames to confirm that, but that would seem reasonable, as price might want to revert to the mean, which is the moving average. You can see that there's still some distance here. Probably, I don't know if the 21 is going to be a thing right now. Maybe it'll get past it, but maybe the 30 and the 50 on the weekly time frame. So we have that. And then if we look at the daily and hourly, you can see that silver is different than gold. So gold is not quite as developed. Silver is actually further ahead than gold as far as being developed. But you can see price down, Moxie indicator up, but we still have price basically dealing with the daily 50. Like, it's not totally set yet. Silver is obviously much further ahead. And then as we look at the hourly chart, we have been seeing some divergence, and then we get this move. Now, we've been talking about this in the Moxie group about gold, specifically AU, and I forget who asked it to me last time, but I'm gonna talk about this more in my next session in the options room and talk about Moxie specific stuff. But I would be considering this still a 50, 200, 50 maneuver. So while this was a pretty good move, I would still consider it to be the first move, and then I want to see about the pullback to create the second move and see if there's going to be something. So even though gold and silver both moved up at the same time, they are in different structures, and we would be looking for a pullback both in silver and gold, just because they went straight up for 2 days. So it's a little extended. So we'll see if we can do that. Leg, heel, arch of the foot, looking for the ball of the foot, and then we'll see if you can get that elf toe on gold. So that's generally what I'm seeing on these time frames here. All right, so some of the other stuff we look at, let's see, XLE and XOP. So XLE and SUS, I think we were talking about EWZ, so I'll go to that one too. Now, if we look at the higher time frames when it comes to this, and I don't often trade anything energy or oil related, mostly because there's so many players involved. It's a global situation. It does make it a little bit tougher, like when news kind of comes out of left field. And right now, OPEC was reducing the number of barrels they produced in order to keep price high. So that's kind of what I'm talking about with getting other players involved and manipulating price. So there's that. And my understanding is I think people were expecting 1 million barrels per day reduction, but then they did 2 million barrels per day reduction. So, whatever you need to do as far as that information. That being said, while it looks like to me XLE generally is trading sideways, it looks like it's actually gone from being really overbought to flagging sideways and now coming into the monthly 10 support and even the weekly 50 support. I mean, this is actually holding up. It looks fairly good. It's making a higher low, and it's mostly going sideways. And it seems like on these higher time frames, they're kind of moving sideways into moving average support. Now, the interesting part and how I teach is with what I call an inverse trampoline move. An inverse trampoline move is when price is over the 50, but the Moxie indicator is below 0. You can see it here again. Price over the 50, the Moxie indicator below 0. In one sense, depending on if it's the right setup, it can be a good short. You can short that because it's telling you price should not be up here, it's going to go lower. On another sense, you could say, oh, it's just a false long, because even though you might be looking at price and saying, hey, look, price is over the daily 50, let's go long. And even here, let me zoom in on this. You might be looking at just price, be like, wow, look at that. Price is over the 50 and it's an uptrending 50. Let's go long. But if you had the Moxie indicator, you would see this. You'd see that the Moxie indicator was below zero. And you're like, that's not good. The price should not be over the 50 if the indicator is below zero. Maybe I don't want to short this because I do think things are going to go higher later, but maybe this is not the right time to go long. That's exactly what the inverse trampoline move is trying to tell you. It's trying to tell you that this might be a false long. And that's what happened here, and that's what happened here. That's the same pattern. If you guys can tell, it's exactly the same pattern, just on two different time frames. And this is where we get the terminology fractal, because it's the same setup, same structure, just different time frames, like it just fractal. So I thought that was pretty cool. And then you can see price did go down. It was shortable if you really wanted to do that. But then you can see that because of what OPEC is doing about reducing their supply, or their production, then the price goes up. But you could actually see here that price got really pretty oversold. You can see it got off of the daily EMA and outside of that third ATR, and then just went right back up. So that's cool, fine. Just like gold, I'm going to consider this the first move. So fine, you could catch that probably on the 15-minute time frame. But for me, trading on the daily and hourly, or something that I'd like a little bit longer duration, then I'm going to be waiting for these time frames to set up, which means that this is the first move off the lows. I would like to see a pullback. I need to verify where that pullback is for support, and then you can buy at support and see if it works from there. So that's my idea there. You can see 50, 200, 50. It hasn't changed directions yet, but generally speaking, I'd be looking for a pullback at some point. And then if we look at the daily chart, basically a double bottom, and you have your positive divergence. So sus, it looks to me like oil or XLE and XOP and all those things, they do look to me like they are basically flagging sideways. They seem like they are trying to go higher, but at this point, I need to see a little bit of a pullback on the lower time frames in order to confirm support, and then I think that we should be looking for an up move if that's going to happen. So XLE, XOP are going to be basically the same thing. And then let's see, with that, trying to think where I was going to go with that one. Not necessarily UNG. Oh, EWZ, that was the one that I wanted to go to. So UNG, same thing, pretty big move down. It is possibly coming into support. We are starting to see some divergence, positive divergence on here. And you can see price is starting to get over the hourly 50. So there's a possibility that UNG might start going up too. If we look at the higher time frames, the weekly and the monthly, you can kind of see the same thing. It got pretty overbought, and now it's back down to moving averages. Maybe a double top, but you can see it's back down to a moving average that has held in the past. So again, this might just kind of be just a really big flag on UNG. So then EWZ, and sus, I think this was kind of important for us to be looking at because, let's see, there you go. Here's the weekly, here's the daily, and here's the hourly. And sus, what I was seeing yesterday when you were asking me about this is on the weekly chart, look here. Leg, heel, arch of the foot, ball of the foot. Looks to me like that's the beginning of the elf toe. So that looks like a bullish pattern to me on the weekly time frame. On the daily time frame, what do we have? 50, 200, 50, and this was a trampoline move. Remember, trampoline move, a regular trampoline move, is when price is below the 50, but the Moxie indicator is above zero. So we saw that, and you can see even here, price down, Moxie indicator, level, but that's divergent. It didn't go lower like price did, and then it shot up. But again, this was a little bit tricky. It was tough to see that, and I think it was basically based on the news of OPEC reducing production, and that is why this thing shot up. So it seems to me that EWZ is on its way to making new highs as soon as it can kind of fix this overbought condition. So I wouldn't be looking to short this. I would really just be looking for a price to kind of fix its overbought condition and then find some support and then pretty much start heading up again from there. I mean, everything I'm seeing from the weekly to the daily is telling me that these are bullish scenarios. So hopefully that kind of helps you. I know we kind of talked about it a little bit yesterday, and so I wanted to follow up with you on that. All right, so that's pretty much what I've got today. And let's see kind of where the market goes. If anybody, I want to see if we can hold that 15-minute 50 and we keep going a little bit higher. If anybody's interested in who I am, what I do, and like the way that I look at this stuff in the market and communicate it, come over to profitpilot.com. You can check out services, and that's where you can find more stuff. You can also find me on Instagram and Facebook and YouTube and simplertrading.com, any of those things. So, all right, guys, thanks again. Hope you're having a good time, and we'll catch you next week.